Hey there, this is Shecky, and today we're going to talk about the coming correction and what you can do to protect yourself. So it's no longer a matter of if there is a coming correction. It's just a matter of when. And this could be argued until the cows come home, but the reality is the values of many homes across the US are now higher than they were before the crash in 2007, right? 2008. Further, we have a situation where the banks have less cash reserves than they did back before the previous crash. The government continues to print money at an unprecedented rate. So we are of the belief that there is another correction coming. And we want to talk today about really the best way to position yourself. It doesn't mean that everything is going to be horrible. Look, in times of distress, there are always people that make money. It just depends on which side of the coin you want to be on. Now, there's a lot of investors out there, especially in the buy and hold space, that feel that they want to own a property of $200,000, $300,000, $400,000 and then rent it out to a high ticket renter. And we understand the logic behind that, right? Because that means that these people are a higher class renter and that they're going to be able to have less trouble, it's lower crime rates, all of the above. However, those properties typically are located in areas with much more volatility, much more big swings in values. And so what my partner and I are doing is we are actually investing in lower priced properties. We make no bones about it. We are in C+, B- neighborhoods. We find that in those areas, it's typically a $600, $700 a month renter. And those renters are actually easier to deal with. They have less expectations. The coolest part about that is we are buying properties that are basically $40,000, $50,000, $60,000 total cost, right? So think about this. Where do you want to be when a correction happens? Do you want to own a property that's $250,000 that has the opportunity to become a $170,000 property? Or do you want to own a $45,000 property that maybe will become devalued to $42,000? Right? So we're looking at ways right now to protect ourselves. And this is what we encourage all of our investors to do, is to look in areas where you can buy inexpensive properties, have really excellent price to rent ratios, make really good ROI, and stop worrying about this home run about appreciation. If you start focusing on the everyday cash flow and high ROI, you will always be protected. Think about this. Another correction comes and the guy that was now in that $250,000 property still needs a place to live. So if, worst case scenario, your $600 or $700 renter is now out on the street because they can't afford the rent, you're going to now be renting to the guy that was previously in the $250,000 property. So you will always, 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 in that class and price of property, have somebody to rent to. Now, if you want to see properties exactly like what I'm describing, head over to our website, highreturnrealestate.com, and just click on the Properties tab. Thank you so much for watching. Have a beautiful day.